Ever catch yourself thinking, if only I knew then what I know now?
Oh, all the time,
Yeah,
especially with investing.
right. Well, today we're diving into a Reddit thread from Our Dividends.
Oh, interesting.
Yeah, people are talking about their experiences with dividend investing, and a lot of it is that if only I started sooner feeling.
I bet. There's so much potential with dividends,
Yeah.
but it's easy to get caught up in what could have been.
Totally. Like the original poster of this thread, they went from knowing nothing about stocks to having $44,000 invested.
Wow.
Right. And get this, in just 2 years, now they're earning $1,800 a year in dividends.
That's incredible, especially in such a short time frame.
And it kind of reframes your thinking, right? They describe it as feeling like a little raise.
I love that. It really highlights the power of having your money work for you. It's not just about waiting for a stock price to go up.
Exactly. You own a piece of a company and they're paying you for that.
It's like being part of something bigger, participating in the success of a company, and reaping the rewards.
And speaking of rewards, the OP mentions buying ExxonMobil XOM.
A classic dividend stock.
For sure. And because they got in a while back, their yield on cost, their YOC, is over 10%.
Now that's what you want to see. It really shows how understanding YOC can make a difference. It's not just the current yield. It's about what you're earning based on what you initially put in.
Right. And a solid YOC like that can give you some peace of mind, even when the market gets a little crazy.
Absolutely. It can help you ride out those ups and downs and encourage you to stay focused on the long term.
Which is key with dividend investing. But, of course, this thread isn't all sunshine and high yields. There's a fair bit of, if only I'd known sooner.
Yeah, that's always a common theme, especially when you think about the power of compounding over time.
It's like they're kicking themselves a bit, but also using it as fuel to get going.
Absolutely. It's that classic fear of missing out, but instead of letting it paralyze them, they're using it as motivation.
I like that. Turn that regret into action.
Exactly. And that's where this Reddit thread gets really interesting. It's not just about wishing they'd started sooner. They're diving into strategies and specific stocks.
Yeah, they're not just dwelling on the past. They want to know, okay, what can I do now?
Exactly. And one of the big debates that comes up is dividend stocks versus growth stocks. It's that classic question. Do you want those regular payouts now or reinvest for potential growth later?
Right, because a dividend stock isn't necessarily always about the biggest dividend, right?
Exactly. Some companies reinvest their profits to fuel future growth, while others prioritize those dividend payments. It all depends on their business model and goals.
So it's about figuring out what aligns with your own investment style and risk tolerance.
Precisely. Are you looking for a steady stream of income to supplement your lifestyle? Or are you more focused on long-term wealth building?
And this thread highlights how individual those choices can be. Like one user, West Huckleberry 957, mentions starting a custodial account for their 5-month-old.
Wow, starting them young. That's fantastic.
Right. And they're already thinking long term, talking about dividend stalwarts like Altria, MO, Coca-Cola, KO, and Pfizer, PFE.
Smart choices.
Mm.
It's a great illustration of how dividend investing can be a long game, building a foundation for the future.
It reminds me of that saying, the best time to plant a tree was 20 years ago, the second best time is now.
I love that. It's never too late to start.
Exactly. But speaking of time, this thread also touches on a strategy that feels a bit more, I don't know, immediate. Covered call ETFs. What are your thoughts?
Ah, yes.
Yeah.
Covered calls. It's a popular strategy, especially for generating income, but it's one of those things you want to approach with caution.
Okay, break it down for me. What are covered calls and why are people so interested?
Essentially, with covered calls, you're selling someone the right, but not the obligation, to buy your stock at a certain price, called the strike price, by a certain date.
So you're giving them the option to buy.
Exactly.
Yeah.
And you get paid a premium for that. Now, if the stock price stays below the strike price, you keep the premium and the stock. You've essentially taken on someone else's risk for a profit.
Seems like a decent deal.
It can be, but here's the catch. If the stock price goes above the strike price, the buyer of your call option can exercise their right to buy those shares from you at that predetermined price.
Ah, so you could miss out on potential gains if the stock takes off.
Exactly. It's a trade-off. You receive income from those premiums, but you might limit your potential upside.
So definitely not a strategy to jump into without doing your homework.
Absolutely. Understanding options trading is crucial before even thinking about covered calls.
Knowledge is power, as they say. But speaking of knowledge, it's clear from this thread that not everyone had access to financial education early on.
That's true. A lot of these Redditors are expressing frustration with the lack of financial literacy in their upbringing. They're just now discovering these investing concepts and wishing they'd learned about them sooner.
It's like they were thrown into the deep end of the pool without even knowing how to float.
A perfect analogy. And that lack of financial literacy can really hold people back from achieving their financial goals.
For sure, and they know it. The original poster even said school basically taught them to go to college and establish good credit. So basically, live in debt.
It's unfortunate, but so common. Financial literacy often isn't a priority in traditional education, which can leave people feeling lost and overwhelmed when it comes to managing their money.
And then they stumble across something like dividend investing, and it's like, wait, there are other ways to build wealth?
It can be a real eye-opener. And it makes you think about what advice people would give to their younger selves if they could go back in time.
Oh, totally. It's like that age-old question, what would you tell your 18-year-old self?
Right. And something that comes up a lot in this Reddit thread, people reflecting on what they wish they had known sooner.
Like, don't blow your first paycheck on pizza.
Haha, well, maybe. But seriously, things like start investing early, or don't be afraid to take calculated risks.
Exactly. And it makes you appreciate resources like the Deep Dive, where we try to break down these concepts and make investing more accessible.
Absolutely. It's all about empowering people with the knowledge and tools they need to make informed decisions about their finances.
Because knowledge is power, right? The more you understand about investing, risk management, and compounding, the better equipped you'll be to achieve your financial goals.
Couldn't agree more. And what I find so inspiring about this Reddit thread is, despite the regrets and what-ifs, there's a real sense of excitement, a curiosity, a willingness to learn and grow.
Yeah, they're not just sitting back and complaining about what they missed. They're actively engaging, asking questions, challenging each other to think differently about money.
Exactly. And that's the beauty of a community like this. They're sharing their experiences, learning from each other's mistakes, and empowering one another to build a better financial future.
And that's what we want to encourage here too. So as we wrap up this deep dive into the world of dividend investing, what's the one key takeaway you hope listeners walk away with?
Dividend investing can be a powerful tool, but it's crucial to approach it with knowledge, patience, and a clear understanding of your own financial goals. And remember, you don't have to do this alone. Connecting with others, sharing insights, and learning from each other's experiences can make all the difference.
Couldn't agree more. And on that note, this is The Deep Dive, signing off. Until next time, keep exploring, keep learning, and keep diving deep into the world of investing.